open was record highs, flattish right now. I just want to point out what's going on in China because we did have an update. Remember that headline GDP number that we had, 6.2% for China. That was the weakest in 27 years. But we did move up in both of the major indices, on the Hang Seng and the Shanghai. These are the two most watched of the indexes over there. And I just want to point out that while the headline number seems like, well, that's a weak number, even though it was in line, the June numbers that we got were really very strong. So, for example, we got industrial production in China beat for June. Retail sales in June beat. Fixed asset investment, that beat. That's machinery investment. So, yes, a weak GDP number, but there's a lot of stimulus going on there, and it's having some kind of effect. It looks somewhat on the positive side overall. Here in the U.S., sector's kind of mixed open here. Semiconductors have a nice open. Home builders had a new open. That was a 52-week high for them, although they're down a bit. Energy, industrials, lagging, and banks lagging. This is that sell on the news. There was really nothing terrible with the Citigroup numbers, but it's leading most of the banks to the downside. 2% beat. I saw loan growth 3%, deposit growth 5%. Those are not bad numbers. That's the most important thing that I watch, not trading activity. You want to watch loan and deposit growth. That's what important. Mild to the downside here, but not unusual sell on the news for the first day of earnings season. I'm more interested in J.B. Hunt. This is one of the big shipping companies, intermodal. They are the largest intermodal shipper. This is rail and freight together, essentially. Shipping's been soft recently. Pricing overall in shipping and intermodal, as well as global shipping, has been on the soft side. I want to hear what they have to say after the bell. And, of course, all these companies have been affected by the global slowdown and trade wars overall. We mentioned J.B. Hunt, C.H. Robinson, FedEx, Hub Group, UPS, all having a tough time. All of those stocks have been basically flattish for a while now. This is for the full year, compared to S&P's up 20% on the year. So earnings season's going to begin here. The focus is going to be on guidance. We keep emphasizing everyone wants to know what's going to happen in the second half. The bears have a very strong narrative that because of the trade wars, because of the strong dollar, because of the issues around the overall economic outlook globally, guidance is going to be disappointing. The bulls are insisting that the dovish central banks, along with the trade deal eventually getting done, will lift earnings into above flattish into somewhat positive territory. We'll see. Remember, margins are a big issue right now. When you have a lot of talk about strong dollar, higher wage and higher labor costs, higher raw material costs, that impacts margins. Margins are about 11% for the S&P. They've been for a while right around there. That could get under pressure a little bit, and this is another sort of side argument that's being made by people who are on the more bearish side. So where are we? The bottom line is this. Right now, we have flattish earnings for the year, and we have a problem because we're up 20% for the year. Flattish earnings up 20%, that's an issue because the market is now very pricey at more than 17 times forward earnings. So you've got to get going here on the global economic outlook. You've got to make some comments here about what may help things out. Interest rates are low. There's your big help overall. But a lot of people are saying, how is it higher? You can't have a higher multiple if earnings expectations are not rising. They're not. Global economy is not really expanding. Is interest rates low enough? That enough to really justify the prices right now? That's the parameters of the debate.